We're seeing massive distress in the California office building market. And if you guys think it's just specifically in San Francisco, Oakland, you're wrong. It's everywhere. Sacramento, Fresno, it's in LA, it's in San Diego. It's getting really bad to the point that they're literally trying to throw these buildings away. They're like, we could sell this for 50% off. And what's worse is like, you could buy these buildings like 10 years ago and you're still forced to sell these at 50% off. Nobody wants it. People avoid it. And big banks are like, you don't let me see that. So if you check out this article on the Mercury News, you got another California building selling at a 52% less than 2018 price. That's crazy. I'm sure, back in 2018 versus 2024, $1 million is worth so much more in 2018. I mean, in 2018, McDonald's still had the $1 cheeseburger. Now those products don't exist. It's a LA building located near Century City and Beverly Hills. So it's not even that bad of a location. Sold for about 52% less than the price 5 years ago. So the building last sold in 2018 for a whopping $92.5 million. Recently just sold to another big capital group for $44.7 million. That is a crazy price. And look at this building. It's really not that bad. And if you go on Google Maps and type in this building, it's actually a pretty high-end, decent office building for a lot of these workers. It's also right next to the main interstate and main highway. If you zoom all the way out, at least it's not downtown LA, right? If you check out the overall building, it looks good. Like, there's nothing wrong with the building. There's even parking. There's also other office complexes. There's a gas station. There's an entertainment. There's some restaurants nearby. Like, this is like a pretty newly built building as well. And they even have an underground garage, which makes things just so much more easier. So this is, in my opinion, like a A+ rank office building. These office buildings are probably sweating right now because they're probably thinking, hold on a second. If our neighbor sold for 50% off, then our price is probably also 50% off, which is pretty frightening because when these buildings sell, even the gas station landlord is like, maybe my plot of land is almost worthless too. And that kind of stuff is pretty scary. And it's not just in Beverly Hills, guys, but downtown LA, some of the most iconic skyscrapers are now selling for better than Black Friday deals. Like the third tallest tower in LA selling for 45% off, only sold for $133 per square feet, which in comparison to Singapore's downtown office space, which is about $2,000 to $2,500 per square feet, that is like a 20x difference in price. That just shows you bad commercial real estate versus good commercial real estate. And if you look at just other cities like Austin, Vegas and Miami, even like these popular locations, we're seeing office space literally becoming junk properties. Office space used to be like the property that everyone wants because everyone needs an office. Even in bad recessions like '08, office space still retain large chunks of wealth because there's still companies, there's still banks. Digital working wasn't a thing back then, and now it's a big thing. In fact, most companies would rather do hybrid work than rent out big offices. Like, look at Schwab. They're saving $500 million by cutting back on real estate. And guess who is the one taking all those big hits? It's the landlords. And this is why you got whole buildings in good neighborhoods selling for like 52% off, 45% off. The AON Tower, that is like a massive skyscraper, and they're selling for like $147 million. That's pennies on a dollar. And what's next for commercial real estate after the $500 billion wipeout in 2023? Well, guess what? 2024, in my personal opinion, is going to get pretty bad. If you guys don't want my opinion, we'll take the opinion of the most infamous short seller on Wall Street, Muddy Waters. They are shorting the Blackstone Mortgage Trust. And there's already mortgage investors in the commercial field filing for bankruptcy. Like JER, the latest property firm to crash because of too many bad commercial property loans. They absolutely got taken out right now. I think it's over for a lot of these mortgage companies. A lot of office landlords are now sweating balls right now because they see their valuation and their buildings just simply get wiped out in the course of just 1 or 2 years because of remote work and hybrid work. Like when you see an office building that was sold 10 years ago for like $300 million, ask yourself, is that still worth $300 million? And in fact, it will probably sell for 50% off. And I've seen so many of these office buildings selling for 50, 60, 70% off. from the original price they bought like 10 years ago, which is insane. So it's not looking great for the office market at all. It's getting pretty bad, but let's see. Maybe it will get better. Thanks for watching, guys. Comment below, and before we leave, check out the private Discord server, guys. That's 7-day free trial, and our trades are actually winning. I mean, some of the most recent profits were like Starbucks and UNH making some pretty big bangers on red days, and we're trading live every single day. Even have video tutorials to help. So check us out, trade with us, and make some money with us.